Hello everybody, welcome to this week's Traders Club. Okay, so in this session, we generally look at Singapore stocks, right? So look for trading opportunities based on the standard trading pattern that we've been discussing over the years. Okay, so my name is Gerald. Okay, good evening. Okay, so taking a look at STI itself, all right? So as we mentioned last week, while STI was having a bounce from the support, right? This gap support that was already closed. Okay, so this gap support, there's this short bounce up, but we were cautioning about this resistance, right, between the 20 and 50 MA. Yeah, so last week towards the end, it tried, and now you can see it's being resisted, right? The price, the price level here attracting some bears. Yeah, previously they could not sell it. Now it's a better price for them to sell. Yeah, so you can see the blue chips, right, for Singapore stocks are facing the bearishness. Okay, so for those who are doing STI or your shorting index, yeah, this is an index to look for as well, right? Because it's now downtrend and at a resistance. Okay, so this is something that we were watching out for if you refer to the past week's video. Okay, but if you are not trading STI, right, and you're looking at individual stocks, okay, so I'm going to share a few opportunities. So there are more opportunities now because the market has pulled back. So previously those stocks that were on an uptrend, they were continuing to run. So but the recent prices, there are some weaknesses, right? So which is good because it's now pulled back. That's something that we have been waiting for. Okay, so I'll show some, highlight those that have pulled back at the same time showing the trading signal, the MACD trading signal. Okay, the first one, say Capital Infrastructure Trust. So I think we mentioned before just that, it is a very slow moving stock. Yeah, but I know some of you like unit trust. So, okay, I'll just highlight this stock because it has the pattern. Right, so finally, after more than 2 weeks, right? So testing on the support, the MACD green signal is showing. Okay, so which means you could wait for the confirmation. So the last thing to wait for will be the confirmation, which is the price must trade at least one bit, right? So higher than today. Today is a signal day, so the high is 545. You're looking at 555 cents, right, for an entry. Okay, so that will be a confirmation. Okay, but bear in mind, this stock is not too volatile. So of course, the good thing is it's not volatile, as in you won't see drastic move. Okay, but on the downside as well is your profit will not be as quick. So you probably have to hold on to this longer. Okay, so but the gist of it is it has met the trading criteria. Okay, uptrend, support, and MACD signal. One green bar after a series of red. Okay. Okay, moving on, Mapletree. So there's something we discussed we have been discussing for a while. So previously in July, there was a trading signal. Okay, so at that time, after it ran up, for those who miss it, we say wait for pullback. Yeah, so it has begun to pull back last week, right? But more importantly, today, right? Not only has pulled back and testing the support, the MACD signal is manifesting. Yeah, so it has appeared. So you can see this is exactly the same as this day, right? On the 20th of July. Okay, so it's the exact pattern, right? Based on trend, support, and signal. Okay, so what you need to look for or wait for would be to wait for the confirmation. So the high is 316. So you're basically looking at least 317. Yeah, so because we can't predict what's going to happen tomorrow, isn't it? So we do not want to jump the gun. So what we need to do is to seek confirmation that the market is still buying, which means if the market is still buying, the price will go up tomorrow. And if it goes up, you'll definitely hit 370. Okay. On the other hand, if nobody is interested anymore, and next day no one is buying this stock, Mapletree Industrial, and the price starts to fall. You can see when the price starts to fall, then you will not hit 370. Then you will not take the trade. All right. So that's the idea for having an entry price set above the high of the signal day. Okay, so Mapletree Industrial, we can look up for 317 and wait for it to trigger. Okay, the other Mapletree will be Mapletree Logistics. Okay, so for Mapletree Logistics, the signal was last week. Okay, so you can see it came down and it bounced off. So on this day, Right, zooming in here. So on this day, this is where the trading signal is. All right. Now the bad news is this signal was last week. Okay, but the good news is the entry price has not hit yet. Yeah. So based on last week, 13th of August, the entry price, the high is 215. So the entry price will have been 216. Okay, but the subsequent days after the signal, you notice the next few days, it didn't hit 216. So as a result, there is no entry yet. So the bad news is the signal was last week, but the good news is it hasn't hit 216 yet, which means, right, going forward, right, the next few days, if it's able to hit 216, which is only a few cents away, it's still a valid trade. Right, it will still be a valid trade to take. Okay, on the other hand, another scenario may play out, which is the next few days the price may linger or trade around, bounce around the support, right? The 20 MA and 50 MA support, which means you will not see any green. You won't see any green yet. You may start to continue to see red bar, isn't it? So which means that will become again many red bars, and you could be waiting for the next green bar, right? Next green bar. And then you could have a new entry price, because this day where the MACD shows a green after more than 4 rates, yeah. If the high is say 212, right, your entry will have been 213. Okay, so that's if a new MACD signal starts to form along the support. All right, so this is if it happens this way. So I'm just trying to play out this scenario, so at least you know what you can expect that and know what to do if it does happen. If it doesn't happen, right? If it's just trading here and the next couple of days the price starts to trade higher and hit 216, it will be an entry immediately already. Okay, all right. So yeah, because the signal is here on this day. Okay, many red and followed by a green. Okay, so that's Mapletree Logistics. I hope that is pretty clear for you. Okay, another stock that has been in the news, right, for so long because of its strong rally. So previously, the other time that it came down was back in June. Okay, so thereafter, for about the whole July and now August, it didn't pull back. It didn't pull back to the 20 MA, right? Until only now. So last week it did came down, but there is no green yet. Okay, but today the green appear. Okay, so this is where you can do the same, whereby you set the entry price. Okay, so the high, right? The high is 850. So you're looking at least 851. So you can even look at 860 because it's $8 stock. You could give some buffer, but it must at least be 851. Okay, before you can take the trade, because the high is 850. Okay, the only problem with this is that because it has run up quite a bit, your stop loss, right? So usually stop loss, we will set it below the 50 MA. Okay, but because it has run up a bit, so the 20 MA it will be slightly far away from 50 MA. So that may result in a pretty wide stop loss. Can you see that? So can you imagine you take the trade 850, 851, right? And if, yeah, worst case scenario, it came back down and hit the stop loss, can you see your stop loss is more than 20%. So for that reason, right, even though this is a good trading opportunity, right, but the risk doesn't justify this opportunity. Okay, one way to get around this is to trade smaller. So, you know, if you're always trading a size of $20,000 worth of shares, of course, if it drops 20%, that will be huge. So you can mitigate that by trading smaller, maybe $10,000 worth of share instead of the usual 20,000. So at least if it drops, right, you're just losing 10% of the whole 20,000. You know what I'm saying? Yeah. So it's like trade smaller to mitigate this big risk. Now, had this risk be only less than 10%, well, we can just go full lot in. Yeah. Once the entry price is hit. Okay, but now we cannot ignore the fact that if it hits a cut loss, it could be a big loss of almost 25%. Yeah, which you need another stock that gains 50% for you to cover back, all right, and make some money. All right, so be mindful of this. So this is a valid opportunity. Wait for at least 851, but be mindful of the risk. So you may want to just buy smaller. Of course, your profit will be smaller as well, but we are just focusing on the risk. Okay, we manage the risk, then the profit take care of itself. All right, so that's stop glove, something that a lot have been talking about it. Yeah, so now there's a trading opportunity. Just be cautious of the risk. All right. Okay, another one is something we talked about as well recently, Ascendas Reit. All right, so Ascendas Reit last week, right, we were talking about a pullback. So it did pull back last week, and in fact last week the signal appeared. You can see the green. Right, so the bad news is the signal has happened last week. Okay, so the high is 348, so you're looking at least 349. Okay, so 348, 349. So the bad news is it has happened, but the good news is it hasn't hit the entry price. Right, very similar to the Mapletree earlier. So you can wait for the entry price to hit. Yeah, so you're just a few cents away. If it hits 349, then it will be a trade. Okay. Yeah, you can check out the stop loss as well. So if you were to take the trade, you could set your stop loss somewhere beneath the 50 MA, right? The blue line, that's the 50 MA. Okay, so if you take a look at this risk, right? If you hit 349 and then if you hit a cut loss at about 322, yeah, your risk is relatively lower, right? About only 7%. Yeah, compared to just now a top glove 20%. Yeah, so that's something that you can have a comparison as a reference. So usually less than 10%, I'll be more inclined to be able to execute the trade. Okay, because my risk is reasonable and controlled. Okay, but I understand everyone has their own risk appetite. Yeah, so use this stop loss and your entry price. Use that as your reference. Yeah, so you know how much or how much percentage of risk you're incurring in this trade. Okay, so Ascendas Reit 349. That is the confirmation entry price. Okay, next REIT, Sabana. Right, so Sabana has also pulled back and it stayed at the support for a pretty long time before the signal happened yesterday. Okay, so the signal happened yesterday, and in fact today is the entry. Okay, so right, so this part is actually the repeat of this part, isn't it? It's the same. Yeah, it's between the 20 and 50 MA, and the MACD has shown many rates followed by a green. Okay, so so the only difference is the entry price. Okay, so the high of the signal day is 37 cents. So the entry is actually 37.5 cents, which today it has triggered. Okay, but I think the saving grace is that it has pulled back to 37. So which means for those who still want to take this trade, if you have to go back to 37.5 tomorrow, you'll be able to execute the trade as well, because it's considered confirmation. All right. Yeah, this is considered a penny counter, right? So I'm just trying to highlight some other opportunities outside of those second liner stocks. Yeah, so these are the penny counter. Another one also penny counter, so it's below 50 cents. It's ABI Tech. Okay, so just to point this out for those who want to take this trade. So the high for ABI Tech, right? The signal day was actually yesterday. So the high is 45.5 cents. So actually the entry would have been 46, isn't it? Okay, so actually today it triggered the entry price. So very similar to Sabana REIT. Okay, the entry price has been triggered. Okay, but it is still a valid opportunity for you because the price has not moved far from the entry yet. So if tomorrow is still around 46, it's still a valid trade for you. Okay. Now, just something to note, just now I talk about the percentage risk. Okay, when you're talking about penny counters, I think you may want to be looking at more than 10%. That's still fine, because penny counter, every move, the percentage will be pretty high, yeah, because of the nature of the low price. Okay, so if you use this as an example, ABI Tech, right? If you take the trade at 46, your cut loss is set at 41.5, right? Your risk is coming close to 10%. Sometimes you could see even more than 10%. So for penny counter, I think if it's around 10, 15, right? Or slightly under 20% is still fine, because the move, the profits, right? The percentage is big as well. Okay, so just be, I hope you can see the difference for penny counters. All right. Okay, so this is ABI Tech. Okay, one more penny counter, right? CNMC Goldmine. So gold has been in the picture, right? Lately, very much in the news. Historical high, never before. as such expensive or high price per se. Okay, so this company may be benefiting from it, right? Previously there was an entry over here in June, but thereafter it has never pulled back for us to even consider looking at it. Okay, but now it has, all right? So you can see the signal over here, 481 green. Okay, bouncing off the 20 MA support. Okay, so entry price. So the high is 35 cents. You're looking at 35.5. Okay, but the only thing about CNMC Goldmine would probably be the risk. Yeah, so if you set your stop loss here, okay, so the price will move up a bit. So if you enter at 355 tomorrow, right, and your cut loss you set below 50 MA, your percentage risk will be pretty high, 28%. Yeah, so for that reason, that's why we will be less aggressive to try and look out for this trade. Okay, but then again, like Top Glove, because these are stocks that have moved quite aggressively already, they really move quite a bit. So it's natural that the 20 and 50 MA is far apart, and naturally the distance between the entry price and stop loss would be wider than usual. Yeah, but if you still insist or you still like to take this trade, please reduce your sizing. Yeah, so like I mentioned, instead of just usually trading 10,000 shares or $10,000 worth of share, you may want to just reduce it to 5,000. Yeah, so that way your risk, right, will not be too overwhelming. Okay, so that's something to consider. But even if you're not pursuing this trade as a case study, this is a valid entry signal. Okay, this is a valid entry signal. Same as Mapletree Industrial, same as Ascendas Reit, they are all standard. And if you look back at Venture, you look back at Wilma, you look back at, right? So all these Sheng Siong as well. Yeah. So all these have that opportunity before the run up. Yeah, it's the same pattern. Okay, it's the same pattern. So can you imagine at that time Venture was like that? Yeah, it was like that. So you can see it's the same pattern, same support, same trend. All right, so these are the opportunities with signal, right? So it means there's already 41 green. You're already waiting for the entry price to hit. Okay, now I just want to share some others which may not have the entry price yet, but you can put in your watch list and then going forward, see whether there are the signal for you to take the trade. Okay. Last week we talked about Jumbo, so it was pretty much mirroring Sheng Siong. Yeah, so let me point out Sheng Siong first. Right, for those who missed last week's video. So it was something like that. Yeah, you see this point where it was just trading. It's definitely on an uptrend. It's definitely not broken the support. 20 MA and 50 MA is still providing support, which means buyers are still there. Buyers are just nibbling at this stock. Yeah, and there's no strong selling. There's nobody willing to sell this stock. So this is Sheng Siong, which happened for quite a long while, right? For I think more than almost 2 months, I would say. Yeah, so at that time, if you look back during May, we're talking about waiting for breakout. Talk about it in May, we talk about it in June. Wait for the breakout on high volume, which if subsequently it did. All right, so this is when last week, when we see Jumbo, right? That's where I was highlighting, I said, look at Jumbo, right? Because it is very similar. Yeah, so this is now coming to almost 1.5 months, right? Of just hanging in there. All right, so wait for a high volume breakout. All right, breakout of what price? Breakout of 36. So it means if you were to see 36.5 cents, right? And then the volume is high meaning you will need to be at least 1 million shares traded. Yeah, then there will become a potential breakout trade. Yeah, so it's like it was on an uptrend and consolidate, and then the next move. So this is, it will be very similar to what Sheng Siong did previously. Right, it was uptrend, consolidate before the next move. Yeah, before the next rally. So even if you miss this, you can wait for the pullback. Yeah, so even for Jumbo, if you do not want the breakout, you can wait for pullback. And when it pulls back here, then you can look out for the 481 green, which you can see over here on this day, 20th of July. 20th of July, right before the entry price is hit, and then it goes for the next run up. And now it's trying to pull back again. Okay, so I'm just showing you Sheng Siong to highlight Jumbo, right? So at least you know if there's a breakout, you can take the trade on the breakout on good volume. That means at least 1 million share traded. But if it breaks out but you are averse to breakout trade, then you wait for pullback. Yeah, so which So like Sheng Siong, subsequently it pull back and it pulls back towards the 20 and 50 MA. By then the 20 MA and then the 50 MA. Yeah, then you look for a 481 green signal. Okay, so the problem with waiting for pullback is sometimes it doesn't pull back. There's a breakout and then the jumbo just run away with it. Yeah, then you may miss it entirely. Okay. Yeah, so that is provided 365. It must break 36 cents. You must see 365 before even considering of any pullbacks or trading on the breakout. Okay, so although it looks like Sheng Siong now, it may not become like Sheng Siong. So what to look out for is if it continues to trade lower, maybe tomorrow, maybe next week something happened, it just continue to trade lower, no buyers anymore, it breaks the 50 MA support, then there's nothing to look at anymore. Okay, so the key for jumbo is 36.5 cents. Wait for a high volume breakout. If not, then there'll be no entry, right? No trade for it. Okay, so that is for jumbo. Okay, so next up, Riverstone. Okay, so Riverstone, the previous signal, as you can see back then over here, right? So there was around $2.40. That was towards the end of June, beginning of July. So at that time, a lot of asking, right? Can we trade? So wait for pullback. So the pullback has finally materialized over here. Okay, so the only thing now what we're lacking is the green MACD. So we're seeing very good consecutive red bars, but that's not good enough. We need a green as a signal. Okay, thereafter you wait for confirmation. All right, so as Riverstone has moved up quite a bit, same thing, your risk could be quite high, as you can see over here. Yeah, so if in the event the MACD forms, find out where's the entry price, then look at your stop loss, and then you can calculate your risk, right? If I think it's not worth to go full lot, right? By at 28% of risk. So usually if you still want to take this trade, then reduce your lot size. Okay, reduce your position sizing. Okay, so Riverstone finally pull back, just that no signal yet. Okay, so no signal means it could pull back even deeper, right? Or even break the whole 20 and 50 MA support. Okay, next one is Silverlake. Right, Silverlake axis. Okay, previously was on a very long consolidation phase, as you can see over here. Yeah, so for more than 4-5 months, it's just trading within this range. Okay, finally when it break out, so that's what we want, breakout, but we wait for pullback. So it did pull back now. Okay, so that's where there's a penny counter, 30 cent stop. So yes, pullback. So what is missing would be your MACD green. Yeah, so it has not manifested yet. So wait for it to appear. Right, it could appear here, right, or it could continue to be red and then green the next day. Yeah, so we don't know when, we can't predict when, so we need to wait patiently and see whether the green manifests itself. Okay, last one would be UG Healthcare. Okay, this is another of those stocks like Top Glove that has rallied and rallied. So the previous pullback was over here in July. Now it has offered another pullback. Okay, so the only thing is, it's very similar to Riverstone, very similar to Top Glove. So you still need to look out for the green, MACD. But more importantly, if the green appear, look out for the entry price. Okay, so if the green appear, see where the entry price is, see where your stop loss is below the PMA, and then you will see that the risk may not be able to justify the type of trade that you take. All right, so if you still want this trade, again, you have to trade much smaller than you would usually have, because of the risk. It's almost 45%. This is one of the bigger ones. All right. Okay, so so at least you know what to look out for, which are the stocks that you can pay attention to. All right, so for those that have trading signals getting ready for you to enter, it will be like Capital Infrastructure Trust, Mapletree Industrial and Mapletree Logistics, right, and Ascendas Reit. Okay, those penny counters, you can look at Sabana REIT, ABI Tech, CNMC Goldmine. All right. Okay, so with that, I'll end this session. Right, if you like this video, give it a like and share it with your friends right? And any comments, you can just put it in the comments below, and I'll see you again next week. All right, have a good trading week.